Welcome back to Financial Wellness Planning. My name is Derek Coffey, and I'm the founder of FWP. And over the last couple of Fridays, we've been talking about ways to protect your financial plan. We've gone over how to protect it from passing away prematurely. We've also talked about protecting it from an unexpected health scare. But the one thing that we haven't talked about covering is your property and your possessions. The first item that we want to protect is going to be your home. For most people, their home is going to be the largest purchase that they're going to make in their lifetime. And it also happens that for most people, their home houses the majority of their valuable possessions. Having the proper amounts of coverage in your homeowner's policy is what's going to protect your home and those possessions in the event that you experience a loss. In this video, we're going to get into what homeowners insurance is, and we're going to cover the things that you should be considering as you look for your coverage. Stay tuned. In addition to covering your home and your possessions that are within that home, your homeowner's policy will also provide you liability protection. And this can come in handy. If someone comes on your property, they get injured, and you're found liable for those injuries, then the liability portion of your homeowner's insurance is going to help cover those costs. Now, a typical homeowner's policy is broken down into 6 coverage types, and they're all lettered A through F. Coverage A is what is known as your dwelling coverage. So if you have a $300,000 home, you think it would cost you $300,000 to rebuild it if it burnt to the ground, then coverage A needs to be $300,000. Every insurance policy is going to have a list of what are known as covered perils, and these can be things like theft, fire, natural disaster. There's a whole list of them. And what this means is that the insurance company will cover any loss that you experience due to any of those covered perils. Every insurance company also has a list that is just as long of excluded perils. Now, this could include anything like a flood or an earthquake, a nuclear explosion. But if you live in an area where you may be subject to a loss that's not typically covered under a homeowner's policy, then you need to ensure that you have the proper coverage for your specific needs. Coverage B is known as your other structure coverage. And the whole purpose of coverage B is to protect any of the property that's not attached directly to the main dwelling. So if you have a detached garage, if you have a storage shed, if you have a fence that's not directly attached to your home, then any loss that you experience is going to be covered under coverage B. Coverage B is typically a percentage of your coverage A limit. So if you have a $300,000 coverage A, coverage B is going to be a percentage of that. On most homeowners policy, it starts out at 10%. So the $300,000 coverage A, it's going to give you $30,000 of coverage B. Coverage C is going to be your personal property coverage. So all of your possessions are going to fall under coverage C if you experience a covered loss. With coverage C, just like coverage B, it's going to be a percentage of your coverage A limit. On most policies, it starts out around 50%. So if you had $300,000 in coverage A, then your coverage C amount is going to be $150,000. Now, if you own more than $150,000 worth of stuff, then you need to get with your insurance agent to make sure the limits match what you need. Another thing I want you to keep in mind about coverage C is that it's not going to cover everything, or it may not cover everything enough. If you have expensive jewelry or an extensive gun collection or a fur collection, most insurance policies are only going to cover up to a certain amount, and it's probably going to be much less than what you actually need. If you find yourself in one of these situations, then you need to look into having an endorsement put on your policy to have those limits raised. For coverage C specifically, I urge you to itemize all of your belongings, especially the high-ticket items. If your home were to go up in flames and everything was turned to ash, you would want to have that itemized list to hand over to the insurance company to ensure that you're compensated appropriately. Without some type of itemized list, you don't have any proof. So if you have everything written down and ideally a picture and a receipt, then it's going to ensure that you receive what you're due in the event that you experience a covered loss. Coverage D is your loss of use coverage. So if you experience a loss and you're not able to live in your home anymore and you have to find other accommodations, coverage D is what's going to reimburse you for those additional expenses. If you have to go rent another home, if you have to live in a hotel room for a while, if you have to go to restaurants because you can't use your kitchen anymore, Coverage D is what's going to reimburse you for all of the money that you have to spend. Now, with Coverage D specifically, you should keep all of your receipts. You should have a running total of all of the costs associated with not being able to use your home. So that way, when you settle up with the insurance company, they reimburse you for the proper amount. Just like all the other coverages, Coverage D is going to be a percentage of Coverage A. Typically, this percentage is 20%. So if you have $300,000 for Coverage A, you're going to have about $60,000 for Coverage D. Coverages A through D are all about protecting your property. Coverages E and F are all about protecting you from liability. Coverage E specifically is your personal liability coverage. So if someone comes onto your property and they get hurt and you become liable for those damages, then your Coverage E portion of your homeowner's policy is going to cover any of those damages. With Coverage E, it's not going to cover intentional acts. So if someone comes on your property and you hit them with your car on purpose, then your homeowner's policy is going to step aside. You're going to owe that out of your own pocket. But for anything that happens on your property that's accidental, Coverage E is going to cover that. Now, the one thing about Coverage E is that it does extend beyond your property lines. If you or someone in your household goes to someone else's property and accidentally causes a lot of damage, then your Coverage E is what's going to cover any of those damages. Now, unlike coverages B through D, Coverage E isn't based on a percentage of Coverage A. You actually select the amount of liability insurance that you want in your homeowner's policy. For most people, you'll be fine with $250,000 or $300,000 of liability coverage. If you want an umbrella policy, then you may need to increase that to $500,000. But for most people, $250,000 to $300,000 is going to be enough. Now, if you're a business owner, I would urge you to increase that limit to at least $500,000. And the reason this is because you're just a little bit more exposed to someone wanting to sue you, especially if they know that you're a business owner. So having that liability limit set to $500,000, it just gives you a little bit more comfort. The final coverage type of your homeowner's policy is Coverage F, or the medical payments to others. If someone comes on your property, they step in a hole, they twist their ankle, they have to go get an x-ray done at an urgent care, then Coverage F is meant to reimburse you for those costs. With Coverage F, it's a set amount that you pick, just like your personal liability coverage, and these can range from $1, $5, $10, $15,000. It's whatever makes you feel comfortable. But Coverage F is what rounds out your homeowner's policy. But what if you rent an apartment? If you rent an apartment or you rent from a landlord, then you need to have some level of coverage for your possessions and your personal liability. And that's where renter's insurance steps in. Unlike a traditional homeowner's policy where you have coverages A through F, a renter's policy is coverages C through F. Now, because you're a renter, you don't own the building, so there's no need for you to have coverages A and B. Your landlord should have that in place on their property. But you as an individual still have possessions. You also have the opportunity to be held liable for someone getting hurt in your apartment. So having some type of protection in place is very important. All of the same rules still apply. Your coverage C needs to be enough to reimburse you if your apartment building burns to the ground and you lose everything you have. You need to have the loss of use in place. If your building gets condemned and you're no longer allowed to live there, you need to be reimbursed for any additional expenses that you incur. And you still need to have those liability protections in place. Anything can happen when someone comes over. You want to make sure you're protected. One thing that I don't want to skip over when it comes to homeowners insurance is the difference between replacement cost and actual cash value. When you experience a loss, every insurance company has their own way of determining what it is you actually lost and what you're going to receive to replace those items. With actual cash value, the insurance company is going to take the value of what you had, they're going to subtract depreciation, and they're going to give you a check for whatever that difference is. In most cases, that's not going to make you whole again. It is going to be cheaper on a monthly basis when it comes to the premium that you pay, but you're not going to get exactly what you had before that loss occurred. If you want to ensure that you receive exactly what you had before that loss occurred, then you need to have replacement cost on your homeowner's policy. And the final thing that I want to go over when it comes to homeowners insurance is getting your coverages quoted. If you haven't had your coverages quoted in the last 3 to 5 years, you need to do so immediately. And this is especially true with the cost of housing going up as high as it has, even over the last 3 years. You may be underinsured on your coverage A. But when you get your coverages quoted, there are a bunch of things that get factored into what you're ultimately going to pay. The breed of dog that you have. Do you have a trampoline? Do you have a pool? How close do you live to a fire hydrant? What is the house built out of? All of these things play a factor in the amount that you're going to pay for your homeowner's insurance. But the reason that I want you to have these coverages reviewed every 3 to 5 years is just to keep everything up to date. Homeowners insurance and auto insurance are very much a set it and forget it thing. You know you have to have it, so you put it in place and you just let it renew on an annual basis. The problem with just letting it renew is that there could be major gaps in your coverage as time goes on. So every 3 to 5 years, take your insurance papers to an agent and have them look for any holes and have them run quotes for you to make sure you have the right coverage for what you need. Now, to help this make a little bit more sense, I'm going to walk you through my own homeowner's insurance policy. What you see on your screen is a copy of my declaration pages or deck sheets. And if you go get your coverages quoted, you're going to need to take a copy of these with you. The reason this is because it has all of the information that the insurance agent is going to need to give you an accurate quote. So for our policy, we do have a $1,000 deductible. So if we experience any type of loss, we're on the hook for the first $1,000. After that, the insurance company is going to step in and start helping us cover some of those bills. For coverage A, or our dwelling coverage, we have $160,000. Now, for reference, we have a 2-bedroom, 1-bath home that's 800 square feet. So that 160 is a little low, but this policy is from last year, so it has renewed and that's gone up. But I feel comfortable with the level of coverage that we have on our dwelling. For coverage B, or the other structures, we have $16,000, which is that 10% I referenced earlier. We only have a storage shed on our property, which I think the previous owners only paid $5,000 for. So $16,000 is more than enough. For our personal property, we have $112,000 of coverage, which is actually 70% of our dwelling coverage. And the reason that it's increased is because we have an endorsement on the policy, which increases the amount of coverage we get for our personal property. So instead of that 50% that would have been standard, we did have it increased just to make sure we had enough coverage for our belongings. If anything happens to the home and we're not able to use it, we do get $32,000 to cover any of those additional expenses. As a business owner, I do have a $500,000 in liability coverage. As I said earlier, it just makes me sleep better at night. And then if anyone does get hurt on our property, we do have $5,000 in coverage F to help cover any of those bills. Now, for this policy, we pay approximately $60 a month. Again, where we live is relatively safe. Our house isn't that big, so we don't pay a whole lot of money for our homeowner's insurance. If we were to go to a different company, if we were to increase our coverages, those premiums are going to go up. But with the policy that we have, I am pleased with the coverage levels that are there. Now, the one thing that I want you to keep in mind with all of the information that I've given you is that no two companies are alike. All of the coverages that are offered for homeowners insurance are going to be company dependent. No two companies are going to cover the same thing for the same price. But with your homeowner's insurance, you need to make sure you have the right coverage for you. Your home is going to be the largest purchase that you make in your lifetime, so you should want to have the right coverages in place. I want to thank you so much for tuning in. If this video or any of the other videos that I've put out has provided you value, then hit that subscribe button. If you know someone who's been with the same insurance company for decades, send this video to them. Maybe it'll get them thinking that they need to get their coverages requoted. But I thank you so much for tuning in. I'll talk to you soon.